Thanks, Tina, and welcome to On-Chain Reaction. I'm Philip Gradwell, the Chief Economist at Chainalysis, back to tell you about what's been happening on the blockchain this week. Starting with prices, Bitcoin is in its 10th week with an average price above $10,000. And that actually is pretty extraordinary. There's only been two other times where Bitcoin has maintained a high price above 10K for multiple weeks. The first one, of course, was back in late 2017 to early 2018, where it managed 13 weeks, and then again in mid to late 2019. So we are getting close to one of the longest periods where Bitcoin has maintained this high price. Recently, in the last week, the Bitcoin price has been relatively flat. And if we look at the amount of Bitcoin that's being held on exchanges, it likely increased a small amount. You can see here the solid line at the top, that's the upper bound of how much Bitcoin we think flows in net to exchanges each day. And then the shaded line at the bottom is the lower bound. And for multiple days over the last week, both the lower and the upper bound have been above zero, saying that balances have overall been increasing. So it's likely those balances have been increasing, but not by a huge amount. So overall, the market is just kind of moving along. I actually think the bigger story is in the longer term fundamentals, which have been strengthening recently. Here, we're looking at the liquidity of Bitcoin. This is a metric that I use at Chainalysis to understand what's going on over the longer term. Illiquid Bitcoin is Bitcoin that is in wallets that retain more than 2/3 of the Bitcoin that they receive. So their wallet's really holding on to their Bitcoin. Liquid Bitcoin, on the other hand, keeps Bitcoin in circulation, sending most of that Bitcoin on. And while the majority of Bitcoin is illiquid, looking at this chart, which goes back to the start of 2019, we're seeing that steady increase in Bitcoin that's being held in these illiquid wallets, which are typically investment wallets. On the other hand, liquid Bitcoin, well, that's actually been declining. And that means there's actually less Bitcoin available to buy, say, on exchanges. So for Bitcoin, more and more is being held in these liquid investment wallets, and less is actually available to purchase. Ethereum has a different story. The majority of Ethereum is actually illiquid, but a lot of that is holdings from the early token sale that hasn't moved for a long time. But then there is an increasing amount of Ethereum that's liquid. So it's actually in kind of fast circulation that's been moved relatively recently. And that increase in liquidity has come with growth in DeFi opportunities. You can definitely see that towards the end of 2020. And so what this means to me is that actually the fortunes of Ethereum are increasingly tied up with the fortunes of DeFi, which have been good for the last couple of months, but there's a lot of volatility in that. We can also look at the liquidity of Tether holdings here on the Ethereum and on the Bitcoin blockchains together. There's been a lot of issuance of Tether over the recent weeks and months. And what we're seeing is that as that Tether is issued, and potentially as the macro environment worsens with COVID recessions and everything else that's going on in the world, Tether is increasingly held as a store of value. And we can see this by the growth in Tether held in these illiquid wallets. Yes, currently the majority of Tether is held in these liquid wallets, but it's really surprising that close to that amount is held in these illiquid wallets. For me, it's very interesting that people are choosing to actually just get Tether and hold it in their wallet rather than using it to trade or even as a means of payment. Instead, people are holding onto it as if it's a store of value. Now, a lot of this data you can actually get at markets.chainalysis.com. So go visit if you want to see this live when I'm not on Coinscrum every week. But in summary, cryptocurrencies, they continue to maintain their high prices. There is short-term price volatility. It remains a risk. I believe as people balance the macro and the crypto risks. So on the one hand, there's what's happening in the stock market and the broader economy. On the other hand, there's just the inherent volatility that is still present in cryptocurrency as holders change their positions. Bitcoin, however, does have this fundamental support that we see by its growing demand as digital gold. And as more people choose Bitcoin as digital gold, that makes it even scarcer. creates an upward pressure on the price. DeFi is increasingly influencing Ethereum. So as I mentioned, expect that volatility as DeFi experiments both succeed and fail. And new Tether issuance is increasingly stored rather than circulated, and really just suggests this fascinating preference for holding digital dollars. It may be that as the macro environment has worsened, people are keen to move out of their national currencies. They want dollars, but it's interesting that people are choosing digital dollars rather than US Treasury dollars. So that's it from me. Back to you, Tina.
You've been watching Coinscrum Markets. Thanks for joining us. See you next week.